Okay, everyone. Today we're going to be talking about payroll reporting and employment taxes. And if I go too fast, please let me know. Oh, sorry, I hit that wrong. So our agenda today, we're going to talk about quarterly returns, annual returns, correcting, well, not today, for the next 3 days. These are the things that we'll talk about: quarterly returns, annual returns, correcting returns, and other reporting requirements. Today, we're pretty much going to focus on the 941. As you know, the 941 has gotten pretty complex. It used to be fairly straightforward, just a 2-page return. It is now up to 4 pages, I think. And if you're a semi-weekly depositor, then you've got, of course, the Schedule B. But it has gotten quite intricate and can be a little bit daunting, especially if you're just starting into it. So we're going to really focus today on the 941. That may spill a little bit into tomorrow if we don't get to talking about the worksheets. But then we'll go on to other quarterly returns, and then focus on annual returns and any sort of corrections that you may have. So I'm going to give you a pop quiz to start with. If an employer qualifies to deposit employment taxes quarterly during the first quarter of the year, under what deposit schedule will the deposit tax for the remainder of the year? Okay, if you guys said it was based on the look back period, you were correct. An employer with tax liability of $50,000 or less during the look back period is considered a monthly depositor for the next calendar year. They have to deposit on a monthly basis. If the tax liability during the month is $100,000 or more at any time during the month, they become a semi-weekly depositor for the remainder of the year and during the next year. Employers who with an accumulated tax liability of less than $2,500 for the quarter can deposit their monthly or semi-weekly, or can deposit for the quarter according to their monthly or semi-weekly status, or pay it with their 941 quarterly return. Their status does remain as their look back period dictates. So what that basically means is, if you were a semi-weekly, but maybe your workforce came down really, really low and you only had 2,500. If your look back period says that you're a semi-weekly, you still have to, you can deposit for the semi-weekly. You still remain a semi-weekly, but you can pay that with your 941 quarterly. So the purpose of the 941 is to provide the IRS with the total taxable wages paid and the total payroll tax liability. That can be matched to the employer's record of tax deposits and wage and tax information that is provided to the employees on their forms, not their W-2 forms. It is a quarterly return that must be filed by all employers that withhold federal taxes. If you have an annual tax liability of $1,000 or less, you file a 944 instead of a 941. When you file your form 941, you don't use any punctuation marks like periods or anything like that. They have, you don't use, like, you won't put in your decimal points there. There are places for the amounts on after the decimal point, so you won't be using anything like that. The form must be signed by an authorized individual, an owner or president or third party with a POA. For example, I could sign, technically I could sign for the 941 for the company that I was with because I filled out the form 2848 and I had a CAF number. So I could have signed for them. I always had the president of the company sign, but I could have signed for them. Designated third parties must click yes on the box for designated third parties. That designation expires after a year. We'll get into that when we start diving into the 941s where the designated third party must check and fill everything out. And where all those authorized agents and third party agents, where you designate them at. Filing your 941. You can make your payments with the 941, including any shortfalls for monthly filers. The full amount to the quarterly tax if the liability is less than $2,500. That has to be included. If you're mailing it in, it's going to be, you must include your 941V, which is the payment voucher. When you pay it, you're going to pay your 941 when you file your 941, which is at quarter end. So the quarter ends March 31st. You're going to pay it before April 30th. If you are a monthly payer or semi-weekly payer and you've made your deposits all on time, you can get an automatic extension for filing your 941, which is a 10-day extension. So they have to be filed by the 10th of the month following the due date. But that's only if you've made your deposits in a timely manner. So like if you're a semi-weekly filer and you've made, I'm going to give you lots of examples for where I worked at Schmeezer Associates. For the most part, we were a semi-weekly filer. And for the most part, we would have anywhere from 50 to 75,000, somewhere around there per week. But we had a large hiring event, as many of you know. And so my weekly filings went up to well over $100,000. As long as I made those, when it was below 100,000, I made sure that I made the payments by Wednesday of the next week. When they went up over 100,000, I made sure I had the payments by Monday of the next week because we paid on Friday. So I was an on-time filer every single time I did that. I was a timely filer. So when I got to the end of the quarter, I could, if I didn't have my 941 done by the end of the month, like say in the first quarter, if I didn't have it done by April 30th, I had 10 more days to May 10th to file that 941. Are there any questions on that? Okay. There were a lot of updates to the 941 for COVID. This is where a lot of the complexities started. The version of the form for second quarter of 2020 was updated to allow for a lot of the employment tax credits and other tax relief for COVID-19. They also revised the 941 Schedule R for aggregate form 941 filers, as well as the instructions for Schedule R, Schedule B for the weekly depositors to account for all these changes. We'll get into what Schedule R and Schedule Bs are in a little bit. The form is used to account for all the COVID-19 tax credits that came from the CARES Act and the Families First Coronavirus Relief Act and the American Rescue Plan Act that came through, and also the COBRA Premium Assistance credits that came through. All these different credits that came through, the emergency sick leave and expanded family medical leave that came through, they all really severely affected the 941. So the IRS had to change the 941 and expand it a lot. I remember always seeing these lines that says reserved for future use, reserved for future use. And I always kind of laughed at this. What are they going to use these things for? Well, now we know what they're going to use those things for. Stuff like this. There are lots of different worksheets that are used to calculate all these different credits, and I have included on these a couple of these worksheets that we use on a regular basis for the COVID-19, a lot of the COVID credits and the COVID premium credits, and we'll talk about those this week. The advanced tax credit. So what this is, a lot of companies knew that they were going to get, they were going to qualify for the credits. They were going to qualify for, like, they were paying sick leave. They were paying the extended family and medical leave. They knew they were going to get the employee retention credit, maybe the new COBRA premium credit they were paying, but they could use this form 7200 to pay for the to request advanced credit to use before their 941. I totally just lost my train of thought. I so apologize. If they needed to use these credits before they filed their 941, they would file this for this advanced credit so that they didn't have to pay their employment taxes at the time that it was due. Did I explain that okay? I guess so. Okay. So we're going to go for the 941 line by line. There's a lot to it. There's now 3 pages versus just the 2 pages, but there's a lot of lines that are pretty what do you call they're pretty heavy, calculation heavy. You use a lot of the worksheets to do it, and you kind of need to know where you're getting all your numbers from. The first ones are pretty straightforward, just like they always have been. You need to know the number of employees who received wages, tips, or other compensation from your specific periods of pay, including, like, say, this is for the 3rd and 4th quarters. So if they had been paid on the 12th, as of the 12th of September, you're going to include it. Say they got hired on the 12th, but they haven't been paid yet, you're not going to include those people, even though they may have worked. If they didn't include it, you're not going to include these people in your count, even though they've been hired. So only the people that were paid during the pay period of each quarter, that includes the 12th of the month for each of those quarter. You're not going to include household employees. Of course, you're not going to include any of those employees that have not received any pay. You're not going to include pensioners or any active members of the armed forces that are maybe on maneuvers or something, that are not working for you but are still on your employment rolls right now. Line 2 is your wages, tips, and other compensations. These are anything that you've paid to your employer that are considered wages. Taxable fringe benefits provided, any other compensation paid to your employees, that anything that's subject to federal income tax. You're going to, anything that you enter on box 1 of your employee W-2 is going to be included in this. Examples of these are group term and life insurance, elective deferrals, such as contributions to a deferred compensation plan or Section 125 plans. These are things that are not included, since they are not wages paid. So if you've got somebody that you're paying wages to, but you take out like benefits pre-tax, you're not going to include those wages that you took out the benefits for. They're going for like a retirement plan or health plan or retirement plan. You're not going to include those wages in there because they're not considered wages paid. If you have a third party that pays sick pay, and those payments are subject to federal income tax, they are reported on this line. That third party may have already paid the taxes, paid the employee portion of the taxes, but you're still going to include the wages that they receive from that third party person that paid those sick wages. You're also going to include them in your Social Security and Medicare wages as well. And we'll talk about that in a second. But these are wages that were paid to your employee on your behalf. So you have to include them in your line 2 totals. Line 3 is your total income tax that has been withheld from these wages. And line 4 is if you didn't have any wages or tips or other compensation, you're going to check that box. Maybe if you're like a seasonal employer, you can check that. Okay, they may know that you're a seasonal employer. You're just going to file that. You're going to still check that you didn't have any wages or any that you've paid. That's what line 4 is for. Okay, this is where it gets a little fun. This is where they decided to get a little complicated with the COVID stuff. So line 5A is a very typical one, taxable Social Security wages. These are all wages that are subject to Social Security, up to wages of $142,800, which is the cap for 2021. I do believe they're talking about raising it again for 2022. They keep pushing it up every year, what the cap is for Social Security. So you have to usually check it around end of October and first part of November is when they come out with their total of what they're going to raise that to. That is times by 0.124. That's both the employer and the employee portion of Social Security, of the Social Security tax. They're both 6.2%. But then we get into the fun stuff, the qualified sick leave wages and the qualified medical family leave wages. So these are sick leave wages taken before April 1st, 2021 that are not subject to the employer's share of Social Security tax. This is amount that you're going to get off of your worksheet 1, line 2, which we will go over in a little, and it's a little farther down on these on the slides here. So if you've gone over the slides, you've seen that worksheet. The qualified family medical leave wages that were taken before April 1st, 2021. These are also on worksheet 1, line 2E. Now, these were the qualified sick and family medical leave wages. These were the COVID leave that they put in for the Family First Coronavirus Relief Act. These were wages that you would have to pay if they were taking time off for like COVID, or they had COVID, or their family had COVID or something like that, and they had to take time off to take care of their family or to take care of themselves. And these were not subject, you'd have to pay the employee portion of the Social Security, but not the employer portion of the Social Security. So it was only subject to the 6.2%, it was not subject to 12.4%. And a lot of the, if you're using a payroll program, this was programmed, you got the update for this and it kept track pretty well for you, so you knew how much it was. But you also want to keep track of it yourself, because you know they only got so many hours and for each of these things. But you're only going to put down the employee portion of both of these. Line 5B is the taxable Social Security for tips. These are employees that receive tips. If they get $20 or more tips each month, they are required to report to their employer how much they've received in tips. The employer has to put this on their W-2. The employer is also required to withhold Social Security and Medicare from those tips, and so that, like I said, it's reported on the W-2. Again, it's up until it reaches 142,800, and it is subject to the same amount, 12.4%. It splits it out for Social Security, but it doesn't split it out for Medicare and wages. Line 5C is both for Medicare wages and tips. For Medicare, technically there is no limit. You're subject to Medicare at no matter how much you make. I know that there's a $200,000 limit. People think there's a $200,000 limit, but what that is once you hit that $200,000, which is on the next page, line 5D, once you hit that 200,000, the employee is subject to another 0.9% tax on top of that. But you're always going to have a Medicare tax. Your Social Security tax stops at a certain point, but you're always going to have the Medicare tax. There's going to be, make sure that you include in your Medicare tax the qualified sick and family medical leave wages, excluding the health plan expenses for the employee retention credit. And we'll get into that, how you calculate that on the worksheets. Line 5E is the total Social Security. You're just going to add all those things up from lines 5A through 5D, including 5AI and 5AII. Line 5F, this is a notice that you'll get from the IRS. Like I said, the employees are required to give the employer a sheet of paper. It doesn't have to be a specific form, but it's a sheet of paper that gives their name, their address, the Social Security number, and how much tips they received in a month, if it's $20 or more. If they don't do that, if they don't report those tips and there's taxes haven't been reported on it, and somehow the IRS finds out about it, the IRS will send back to the employer a notice and demand for tax on unreported tips. And it's entered here, that notice and demand, you get it, you pay for it. And then how much you pay, you're going to enter on line 5F. However much you've paid during the quarter is what you enter on line F from that notice and demand that you got. Then you're going to add up all those taxes and put it on line 6. And that's your total taxes before any sort of adjustments. And then we get into the fund adjustments. Line 7 is pretty simple. There's always going to be kind of a minor adjustments for fractions of cents on the employee portion. They usually end up, they're either going to be a positive or negative adjustment, 10, 20, $30 a month or a quarter. It's not going to be all that much. And like I said, it can be a positive or negative adjustment. When you're putting in a negative adjustment, you either want to put in the negative sign or put it in parentheses. I tend to put parentheses in there because I think they can miss the negative sign. It's such a small little dash. You can put the negative sign in there, but I like the parentheses because it's easier to be seen. Just my own personal viewpoint. But so the line 8, this is an adjustment for the employee share of Social Security and Medicare withheld by your third-party sick payer. As I said previously, you have a third-party payer that pays your employees who are out sick, and they will pay the federal income tax and the employee portion of the Social Security and Medicare, but they don't pay the employer portion of it. So you reported it up above, and you reported everything. You reported the federal income tax, and you reported how much was subject to Social Security, how much was subject to Medicare, and you reported the total amount of tax that was subject to, but they've already paid the employee portion. So you're going to take an adjustment. You're going to subtract out the amount that's already been paid. So this is a negative adjustment, taking off the amount of taxes that you paid. Same thing with the quarter adjustment for tips and group term life insurance. This is a negative adjustment here for uncollected employee share of Social Security and Medicare taxes taken on reported tips and on group term life insurance coverage. Now, this sounds kind of crazy. Why would it be a negative adjustment? So you have an employee that quit maybe the first of the month. And most of the time you have like, I'm going to start with the group term life insurance. So you've already paid for the month for that group term life insurance, and they quit during the month. So you've already paid in advance for them, but they quit. You've paid, this is group term that they've paid, not one that the employer provides for them, but this is one that was taken out of their check. They're going to get that premium back, and you're not going to end up collecting that Social Security and Medicare taxes that you've paid on that group term life insurance, because usually it gets sent back to them by the insurance company. The amount of premium that they paid will get sent back to them by the insurance company. So this is going to be an adjustment on that premium that they paid, that you've already taken that out, whatnot. You've reported that, so you need to make an adjustment for that amount that you've reported, but you're not going to end up collecting that Social Security and Medicare taxes back from them that they got the money back for. Does that make sense? There's no questions on that? And it's the same thing with reported tips. You know that they've made this much in tips, and you have to report it, but they've already quit, so you didn't get to collect any Social Security and Medicare taxes because on that last check, because maybe they already got their last check and they didn't report their tips. So it's sort of an adjustment that the IRS allows you to make because you weren't able to collect those taxes from them from their last check. And in line 10, you're going to add up all those adjustments, so you know how much you can take off your total tax. Line 11, there's a qualified business tax for research for small businesses that they can take up to $250,000. It has to go through a form 8974, and it has to be approved first before you can take it. It's pretty straightforward. You fill out that form, you get the approval, and then you can take the tax credit for it, up to $250,000. The credit that that employers receive for the qualified sick and family leave wages taken before April 1st, there's both a refundable and a non-refundable portion of it. The non-refundable portion goes on line B. Now, there are going to be two different instructions in quarter two, and I don't know which one of these are going to land on the test. I suspect they're probably going to test you on a little bit of both. They're fairly similar, but it's good for you to know both, because if you have to do a 941X for second quarter, you need to know the rules that go along with second quarter 2021. So it's good for you to know the rules that go along with this. So study up on it. And I would really, really encourage you to go through the instructions to the 941. They've gotten a lot better about writing their instructions. It used to be really, really hard to read the instructions that came from the IRS, but they've gotten a lot better about writing their instructions. So it didn't have circular logic anymore. It's pretty straightforward. You can read through it, and they take it line by line, and they give you instructions for each line. Some of them are some lines are just pretty straightforward. You know, like, yeah, duh, no wonder. That is what it is, but I've got other questions on that, and you might have to research it a little bit more. But for most lines, they give you pretty clear and concise instructions of what needs to go on there and where you get the information from. So before your test, I would read through the 941 instructions. And the other thing I would read through before your test, this is what I did before mine, is I read through about 5 times with Circular E. There are a lot of test stuff that I got off of Circular E. So that's my test tip. Read through Circular E and digest it a lot, because a lot of it comes from there. And Pub 15, that's another one, Pub 15. Okay, so back to this. Businesses and tax organizations with fewer than 500 employees, and this has been pretty much since, you know, this comes from the Families First Coronavirus Relief Act, the FFCRA. They're eligible to claim a credit for qualified and sick and family leave wages. This includes the allocated health plan expenses for anything taken before April 1st. It's pretty straightforward. We've already talked about that. Line 11C, though, is the non-refundable portion of the employee retention credit. The employee retention credit I found to be the hardest one to figure out, because it has to do with how much the company made in comparison with how much they made in 2019. So the employee retention credit is 70% of the qualified wages paid to the employees during the quarter, which includes the qualified health plan expenses. But you can't take the employee, how you qualify for the employee retention credit is if your income is 80% of what it was in 2019 for the same quarter. I think it's 80, yeah, it was 80%. It was 50%, then they raised it to second or third quarter 2020. It was 50%, fourth quarter 2020 and first quarter 2021 Now, fourth quarter of 2020, it was 75%. Then they raised it to 80%. It's now sitting at 80%. So if you've made 80% or less of what you did in 2019, you can qualify for the retention credit. It's all designed for those people who lost a lot during the shutdown last year and are still struggling to get employees in. The calculation for this credit is on the worksheets, the same as everything else. These credits are first reduced by any credit you claim for the small business payroll tax credit for research activities, or any work opportunity credit for a tax exempt organizations. It's pretty close to the same for third and fourth quarter. 70% of qualified wages, and reduced by the same things for wages taken after March 31st. Let's see. Oops, I went the wrong way. So line 11D is for the qualified sick and family medical leave wages after March 31st, instead of the other ones were for before April 1st. This one as after March 31st. And you get this off of worksheet 3. Notice you get this off of worksheet 3, not worksheet 1. The next really fun thing is the COBRA premium assistance. The COBRA premium assistance was the American Rescue Plan Act put in the ability for people who were on COBRA to get and lost their coverage or could continue on COBRA from April 1st to, I believe, September 1st, but that the employer would pay for their COBRA. So they pay their COBRA premium. So this COBRA premium assistance, you could put the non-refundable portion here. You have to list on line 11F how many people you have on COBRA premium assistance. How much credit it is on worksheet 5. Lots and lots of worksheets. They can be fun to put everything together, but pretty much they're straightforward of just where you put everything, adding and subtracting. Line 11G is just adding everything up. And then line 12 is subtracting 11G from line 10. Line 10, remember, was the total after adjustments. So this line here, line 12, is what you have to, it has to match what you have on your Schedule B, or what the total amount that you have on line 16 if you're a monthly depositor. So if you're a monthly depositor or you're semi-weekly, your last payments, you should be taking into account, you're going to be getting some credits. You should be taking these into account as you're making your last payments, so that your total from your Schedule B or your total for your monthly deposits match whatever's going to end up on line 12. Line 13A is your total deposits that you made for this quarter for income tax, Social Security tax, and Medicare tax. You're going to include any overpayments from a prior quarter that are applied to this return as a credit taken on a form 941X. I'm sorry, I got to take a drink of water. But you're not going to include anything that wasn't deposited in anticipation of these credits that you we're taking. Excuse me. So now on line 13, we're getting into the refundable portions of the credits that we just talked about, the qualified sick and family medical leave acts taken before April 1st, and the employee retention credit. Again, this is on worksheets 1 and 2. And for quarters 3 and 4, the retention credit is going to be on worksheet 4. And it's the same calculation, so I'm not going to go over the calculations yet because we're going to go over the worksheets, but it's the same thing. It's just the refundable portion amount. And line 13E is the refundable portion credit for sick and family leave wages taken after March 31st. And 13F is the total deposits, deferrals, and refundable credits. You're going to get that. This is where you're going to have the refundable portion of the COBRA premium that you get off of worksheet 5. And the refundable portion of the credits that are allowed for after the employee share of Medicare taxes is reduced to 0 by non-refundable credits. Line 13G to all add it up together. So we talked at the beginning, we talked about the form 7200 where you apply for permission to get advanced credits. You know you're going to get the credits for these sick and family medical leave wages, for COBRA premium assistance, employee retention credits. Well, line 13H is where you're going to account for that. This is the total advances that you received from that form 7200. If you get it before the end of the quarter, but the advance payments haven't been received, if not been received before filing the 941, you're not going to include the amount. Does that one make sense? If you file the form before the end of the quarter, but the advance payment, you didn't get the advance payment for it, you don't include the amount. We've already talked about what makes you eligible, so I won't go over that again. Do take note of that little note that's down there, because I do believe that probably is going to be in the test where they ask you, they may ask you in some way, shape, or form about it may be filed in the quarter up for a quarter up to the end of the month after the end of each month, or the filing of form 941 for the quarter. Advance payment requests on form 7200 for a quarter will not be paid after the organization's form 941 is processed for that quarter. Sorry, I gotta take a drink. We got about 15 minutes left. So 13I is we're gonna add it all up together. Then we're going to figure out your balance due on line 14. If you have a balance due, a lot of people who've taken all these credits, they probably won't have a balance due. You may have an overpayment, so you might get something back. You're not going to have both a balance due and something back. So there should never, ever be something in both lines 14 and 15. If you have an overpayment, be sure to check either apply to the next, either apply to the next return or request a refund back. You need to check one of those, otherwise it might go into limbo. But do make sure that you check one of those. Part 2 is, this is all from now here on out to the part 2 and part 3. It's pretty self-explanatory. Parts of part 3 isn't though. Part 2 is pretty self-explanatory. You're just going to tell them what your deposit schedule is, whether you're quarterly, monthly, or semi-weekly. If you're a quarterly, of course, it's under 2,500. If you're monthly, you're going to write down here how much each month that you deposited. And your total liability, of course, has to equal line 12. If you're a semi-weekly and you check that, you have to include a form Schedule B, or not a form. You have to complete a Schedule B and attach it to your Form 941. Part 3, you're going to talk about your business a little bit. You're going to, if it's been closed, if you're a seasonal employer, or if you're eligible for your employee retention credit because your business is a recovery startup business. Now for third and fourth quarter, employees that qualify for the retention credit because your recovery startup, you absolutely need to check that box, but it shouldn't be checked for quarter 2. Lines 19 through 28, these, if you have like a payroll, most people do, your program, when you fill out the worksheets 1 through 5, it'll probably pre-fill all of these as you're filling out your worksheets. It's going to put in the amounts in here. It's not going to, you're probably not going to have to fill these in yourself. Sorry, my son doesn't. Okay, so, but most programs will pre-fill these lines 19 through 28 for you, but you really should know what goes in where, and you should have an idea. If you're doing things right, you should have an idea as to how much should be in each of these lines, so that when you're reviewing it, if it doesn't look right, you can, it'll you know, pop out to you, and you can look through it and try to figure out what's going on and why it doesn't look right, and go back to your worksheets and see if you put a number in wrong. But if you're paying attention and you've gone through here and you've gone through everything correctly, you should know approximately what should go into each one of these lines. Pop quiz. Don't you just love pop quizzes? A company is a monthly depositor for 2020. On a payday, a company has accumulated a payroll tax liability of $101,000. For the remainder of 2020 and for all of 2021, the company is required to deposit taxes on a daily basis, B, semi-weekly, C, semi-monthly, or D, monthly. You said semi-weekly, you are correct. We just went over this. Monthly depositors, including a liability of 100,000 or more in the month, are required to deposit the liability from the deposit period the next business day. A monthly depositor, including a liability of 100,000 or more, becomes the semi-weekly depositor for the remainder of the year and for the next calendar year. So the look back period is the third and fourth quarter of one year and the first and second quarter of the next year. So for 2021, the look back period will be the third and fourth quarter of 2019 and the first and second quarter of 2021. If you made $100,000 deposit in any one of those quarters for 2021, you will be a semi-weekly depositor. For Schmeezer Associates, of course, they often, because they're a construction company, they can shoot up. You know, we shot up to over 500 people there for about 6 weeks, and now they're back down to about 150 people. So for about 6 weeks, they were doing about $130,000 a week in payroll taxes. Now they're back down to about $55,000 to $60,000 a week. So, but because they had 6 weeks there where they were doing 100,000 plus, they are for the next year a semi-weekly depositor. They've been semi-weekly for a long time, but because they had those $100,000 each week. They're going to be for 2022. All of 2022, they will be a semi-weekly depositor because their look back period includes that $100,000 payments. Like I said, we talk about third-party designee. They're going to ask about their third-party designee. This is where I would put my name when I fill this out. I would put my name, my phone number, and a 5-digit PIN number. This allowed me, if there was any problems with the 941, I could call. I had a CAF number for Schmeezer anyway, so I could call about anything for Schmeezer and give him my CAF number, and I could talk about it. But if I didn't have, before I had my CAF number, I could call about the 941 and I could give him this 5-digit PIN number for the 941, for that particular 941 for a whole year, and talk about that specific 941 for one full year after I filed it using that 5-digit PIN. The CAF number allowed me to talk about the 940, talk about any of their, anything related to the business with the IRS. So if you're working, you know, CAF numbers, they're a lot easier than just a PIN number, because the PIN number only allows you to talk about the 941. CAF, you can talk a little bit more. Yeah.
Can I ask a question? So the 5-digit PIN, is that one that you are assigned, or is it one that you kind of assign yourself?
That's just one I assigned myself. I usually took the last 5 digits of the phone number that I had. So you would just give them that. The CAF number they assign you, but the PIN number is just one that you give them.
Thanks.
The signature, it's anybody who's in the authority this to sign there. There's also, if you're a paid preparer, there's below that, there's a paid preparer part. There are some very avoidable errors on the 941. One of them, of course, is reporting the wages and the tips separately, making sure that you separate those. We only have a few minutes left and I'll get through this. And it might get confusing because you combine the Medicare wages and tips, but you separate the Social Security wages and tips. The other one is to make sure that lines 6, 7, 8, 9 are combined on line 10. So double check that line 10 is the sum of 6, 7, 8, and 9. Double check your calculations on your Social Security tax. What I would usually do on that, because my system pops it out, I would still double check everything. I always kept a reconciliation sheet. So I would still double check everything. I would double check the calculation by going both ways. I would take the amount of wages and I would times it by the 12.4 to make sure that the calculation was that way. I would make sure that the calculation on my reconciliation sheet was correct as well. But always verify that calculations on your Social Security tax and your Medicare tax, as well as your additional Medicare tax on line 5D. Always check those calculations. Always make sure that there's not something on both lines 14 and 15, which you can't owe and get something back at the same time. Just doesn't work that way. At the end of the year, you're going to want to take all your 941s and add up the total wages from all of your 941s and check and verify that they match the total of your W-2s. If they do, you know your W-2s are correct. And then always make sure that there is a signature and the name printed for your signer's name where it should be. So I think this is a good place to stop. Let's see. No, let's go through this last one, and then tomorrow we'll go over the worksheets really quick. So there's a different ways to file your 941. You can file by paper or you can file by e-file, and they're really pushing for you guys to for all of us to e-file, because number one, it's just simpler for them. They're going to get, you know, when you file it by paper, they got to scan it in anyway. There's more chances of them losing it. There's more chances of them losing a page here, there, which I have had happen. I've had them lose my Schedule B more often than I can tell you when I was mailing it in. So it's much easier for you to e-file, but you do need approval from the IRS to be to e-file with them. And you can e-file both the 940 and the 941. If you're a reporting agent, you can get authorization as a reporting agent to e-file with them. If you're an electronic return originator, basically, those are people that they gather all the a bunch of 941s together, and then they file for everybody all at once. So they would have an EFIN for that. Well, that's a third-party transmitter. Also, software developers. I think, man, and don't you guys use like iSolve? They also probably all e-file.
Yes.
So their software has anybody that you can e-file from a software. They pass through what's called an assurance test. They've already gone through the IRS and done all their checks and balances, and the IRS has approved that software for e-file. So that's what we're going to end today. Tomorrow we'll talk about the worksheets, and we'll talk about some of the annual returns that we do. Is there any questions, anything that you guys have questions about, or any tips you want from me? Has that been there, done that?
I learned a lot from what you went over today. Thank you for all of the examples.
Yes, agreed.
Yeah, so like I said, my biggest tip, I did not do this. This is one of the reasons why I wanted this chapter so badly, was so other people did not have to study alone. But like I said, one of the things that I noticed when I was testing is I did the whole study through the Pub 15 and the Circular E, and a lot of stuff came off of those. So I would, if I were you, I would really, really go through those very carefully. Okay, so I'm going to stop sharing.
Well, thanks again.
You're
Yeah,
welcome.
thank you.
Hopefully I didn't go through too fast and stumble too much. I do much better when I'm in person.
Just pretend. No, you did great. Thank you.
Yes, yeah, thank
You're
you.
welcome. You're welcome. We'll see you
Tomorrow.
guys tomorrow.
Okay, bye. Thanks.
Bye.